7. We are in Cracker MCQ series BFM module C and D combined we are taking. Up till now we have covered BFM module A and B and also ABM, all the 4 modules. We are covering all the objective questions related to CAIIB, ABM, BFM and retail. Okay. So C and D is related to what? Treasury mainly, risk, and third is balance sheet management. Okay. Mainly banking. Okay. So let's start. Before moving ahead, I would suggest download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study material, current affairs, job alerts. Remember, the new portion which is coming up for May 23, that will also be there. Okay. So daily quizzes, subject-wise quizzes, magazines, power capsules, blah, everything. Okay. Whatever you need for CIIB, including these live video lectures. Okay. Live video lectures plus recorded ones. So download this fast. Subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting all the updates regarding this CAIIB and JAIIB. Do you know the new exam pattern for May 23? We have already updated videos on that. Okay, go for it. Okay, this now or never offer. Get your CAIIB and CAIIB video courses and CAIIB prime test packs at the lowest prices ever. Okay, so this is now or never. You won't get it again because why? See here, you will be getting classes, notes, everything over here, full material. Now the point over here is in December 2022, this is our last exam. In May 23, we are coming up, means IIBF has come up with a new portion. Okay. So let's start with the series. Okay. What was my question which I gave you for homework? The major components of risk management are. So what are the major components of risk management? Risk identification, measurement, control, and all of these. So I just taken a previous one question previous to this question, right? It contained all these 3 factors. So all of these is the answer. So always remember risk, whenever you are managing the risk, first you have to identify the risk, then you have to measure it, and then only you can control it, right? You can input these are the 3 steps. There is one more step in between which is not given over here, right? But remember, first you have to identify any problem, then only you can solve the problem, isn't it? Payment and settlement risk may not be on the, may be on the account of. Now what do you mean by this payment and settlement? Now understand one important part. This risk occurs generally, okay, when there are different time zones in various countries. For example, suppose imagine somebody is selling something from US and sending dollars to us, okay. So generally what happens, when we have day in India, we have night in USA. When you have day in USA, we have night in India. So somebody, he or she sends dollars from USA during their daytime, but we have night at that time. So we will receive those funds when we come up next day. So there will be a lag of almost 12 hours. So this causes the settlement risk. Means in between, if something happens in these 12 hours, then this causes the settlement risk. Okay, so it may be on the account of what? Payments and collections, fund transfer, clearing and settlement, all of these. So here, now, okay, let me get the answer from you first. Payments and collections, fund transfer, clearing and settlement, and all of these. So what is the answer? What do you think should be the answer? Fast, everyone. Okay? Yeah. Right. See, D only. D is the answer. Remember why? Because see this, payments and collections, through whom you are sending, we call it the Loro bank, Nostro, Vostro and Loro, right? That Loro system. So that can also pose a risk. Fund transfer, directly Nostro, Vostro, that can also pose a risk. And clearing and settlement. So clearing and settlement again means the combination of A and B only. So all of these is the answer. Risk in trading securities may arise from the following activities. Now what do you mean by this? Trading securities. What do you mean by securities? Firstly, tell me that. What is trading securities? Securities means what? Remember, securities includes many things over here. Firstly, bonds. Okay. Secondly, you can call this as a commodities. Okay. Bonds. Then it can include stocks. Okay. Then it can include forex. Any commodity. Okay, securities may be of any type, isn't it? Okay, so risk in trading securities may arise from the following activities. So due to what? Foreign exchange transactions, right? Because if there is a change in the forex rate, within immediately or within a short span of time, then you will be posed with that risk. Equity holding. Now this is related to stocks. If you are holding the shares and something happens to these shares, then definitely you will be facing the trading risk. Lending and repos. This is related to bonds, right? So once the lending means the repo rate changes, then immediately the bond rates also change. So the answer will be definitely what now? Everyone, what will be the answer? Correct. The answer is all of these, correct? Today we are seeing all of these as the major answers, but remember, although you might be seeing these answers as all of these, what you need to understand today is what are the main points A, B and C, what are those, and you need to understand them first. Okay, in exam you might not get all these options. You might get this option is correct one and remaining two they will be giving it wrong. So then you'll have to take only A. Okay, so understanding is very important. Remember, CAIIB is not related to remembering, it's related to understanding. Which of the following is not an agency service of the bank? Okay, agency service means what? Okay, let me get the answer first from you. Extending credit cards, escrow, depository receipts and securities funding. So what is not the agency service? Firstly get me the answer. What is not the agency service? Escrow, depository receipts and securities. I'll explain each one. Okay, let me explain this first. What is escrow account first? Here, credit cards many of you know, because I won't be going into that now. So escrow account. What is escrow account? See here, if there are two persons A and B, or two countries, okay, A and B, it can be anything, yeah? Two persons, two countries, two industries, anything. They take some money, bring some money, 100 rupees over here from this guy, 100 rupees from this guy, and they form a joint account of 200 rupees. Okay, now this escrow account means up to the time some project, and they are working on some project, imagine, okay, up to the time the project is completed, these 200 rupees no one amongst these will be able to touch without the other one's signature. So escrow is always a short term account kept for temporary purposes, generally for completion of some project or some work. Okay, depository receipts. So what are depository receipts? These are similar to that of the warrants, okay, and debentures. Basically see this, depository receipts are this is generally related to some foreign companies investing in India, foreign persons trying to invest in stock markets through P notes. Okay, so that can also be a form of depository receipts. And third is securities funding. So securities funding means what? Funding for the securities. If you have to buy the securities or funding. So is this an agency service? Okay, firstly understand the answer is, the correct answer over here is A. Extending credit cards is not an agency service of the bank. Okay, now what is agency service? Agency service means which is not the actual banking activity. Means insurance service. Is this a banking activity? So but this is an agency service. Mutual fund service. Okay, is it a banking activity? No, right? So this is an agency service, but extending credit cards is not a this agency service for the banks. Okay, what is the off balance sheet risk? Now firstly understand what is off balance sheet means. Off balance sheet means which can't be shown in the balance sheet of the banks. Now what can't be shown in the balance sheet of the banks? Firstly, what is shown in the balance sheet of the banks? Always remember, in balance sheet of the banks we always have assets and liabilities, right? What are assets? Assets on over here and liabilities over here, right? What are assets? All the loans. Now loans can be of various types, remember, various types. So loans can be this CC, loans can be term loans can be the pre-shipment, post-shipment credit. Loans can be means loan given to somebody. It can be holding of bonds also of some separate company, or RBI bonds which are held by the bank. These are also assets, because what is that? Actually it's a loan given by that bank to that specific issuer, right? And what are the liabilities? Liabilities are depositors. Okay, deposits plus the bonds issued by the bank. Remember, bonds issued. So bonds will be there in both assets and liabilities. Here issued and here bought. Okay, bought. So now these are all the activities where actual funds flow out. Okay, here funds move in, cash funds move in, here funds move out, right? Funds move out means we receive the income from this. Okay, here in assets what happen, we give the loans, so the loan is given to the customer and we receive the interest, and here it's a reverse thing, but it's a cash transaction. But off balance sheet means that is not reflected, it's not a cash transaction. For example, guarantee issuance. If you issue a guarantee on behalf of somebody, you don't give actual cash, isn't it? So what is the off balance sheet risk? It is contingent in nature. Contingent means what? It comes later someday. So that is a similar logic for guarantee. It can occur on account of issue of guarantees, committed credit lines and issue of LCs, correct? So these are off balance sheet items: guarantees, credit lines and LCs. These are all the types of this off balance sheet items. Bank's commitment may happen on account of failure to meet payment obligations. Means what? Suppose if you issue the guarantee on behalf of, let's say, A to, let's say, Government of India, and that person on whose behalf you have issued the guarantee is not able to perform. Let's say there is a contractor who has L&T. Let's say you are SBI, you are a bank. I'll write it over here. Okay, you are a bank over here, SBI. Okay, then there is separate company L&T. Okay, and this is Government of India. Now you issue a guarantee to Government of India on behalf of this L&T, that L&T will construct that bridge. But what happens, due to certain reasons, this bridge was not constructed by L&T. So Government of India will come to whom? They will come to you, because you have issued the guarantee. So this is the meaning of C. Bank's commitment may happen on account of failure to meet payment obligations. So what is the off balance sheet item then? A, B, C or D? Correct. The answer is D, all of the above, isn't it? Now one for your homework. So the significance of contingent liability is, so significance means what? Importance. The word significance means importance. Okay, so you have to answer this now. I'll answer it tomorrow. It adds the revenue to the revenue generation of the bank. Of course, whenever you issue the guarantee, you will definitely get some fee from that party, right? Banks may also have contingency receivables. It can be the option. The bank is obliged to meet the commitment only on account of failure to meet the obligation by the person on whose behalf the bank has made the commitment, correct? So that is also point number C, and D is all of the above. This is what you have to answer now. I'll answer this tomorrow. Okay, before going, let me tell you that the new scheme, the scheme which I just now showed you, the live video lectures and all the packages available, I'll show you live right now. Okay, then, because see this, the packages over here, let's go to Adda 24/7. See this, go to Adda 24/7 and then click on the JAIIB and CAIIB. See this, you'll see the JAIIB CAIIB Mahapack, CAIIB 2023. So see this, new batch of 2023 has also come. Okay, so but now I won't show you about this. I'll just show you about this Mahapack. Okay, because first I would suggest clear this in 2022 itself. Okay, join these batches as ASAP. So CAIIB Mahapack, click on this Mahapack. Once you click on this Mahapack, you'll get the details over here. See, look at all the details. What are the details? Live classes more than 500 plus hours, 4 plus batches ABM, 3 plus batches BFM, 3 plus for retail, and go on and on reading. Okay, all these things are, we cover all the numericals, case studies, objective questions, then everything related to CAIIB basically in the class. Okay, yeah. Now see this, it includes all current 2022 and new 2023 syllabus also. Okay, so click on view offers. Now the fees is 3299. Click on view offers, put the code Y432. Now look at the fees. Click on apply. See this, it reduces to 7589. 3299 reduces to 7589, 77% off, huge discount. Okay, so go for it immediately. Why am I telling you that to go for this batch immediately? Because see this, December 2022, I'll tell you what the portion is. Look at the portion of December 2022, this May 23. Look at the portion of May 23. See this, May 23 you are having ABM, BFM, ABFM, new subject. Then BRBL, Banking Regulations and Business Laws. So these two subjects are additional as a compulsory subject. Also look at the elective part. Elective rural, HR, IT, central banking and risk. There is no retail. There is also negative marking in May 23. So that's why I am telling you. Join these batches SF for December 2022 exam and clear it within this span only. Okay. I'll be back tomorrow with another session. Till then, bye.